Starting with the Indian rupee, which is holding on to its 3-week highs even as the dollar continues to strengthen. The currency shut shop at around 60.56 on your screens, 0.2% of a decline coming in for the currency. Let's get on board Vijay, who's author and CEO at BSPL India. Also joining us is Samiran Chakrabarti, who's Regional Head and Research India, Standard Chartered Bank. He joins us live as well. Samiran, hi, welcome. Let's start with what the rupee really seems to be doing. We've had 2 weeks of gains. We almost are holding around 3-week highs. Today, of course, has been a weaker day. Would you call it the Yellen impact?
Well, if you look at INR typically is performing much better among the EM peers, and that's fundamentally because most of the macro problems that India was facing, the investors are feeling that those problems are now more or less over. Political stability has come back and expectations are better from Indian growth story as well. So if you put all these combined, even in the month of August where typically emerging markets have seen outflows, India has witnessed almost $3 billion of inflows in debt and equity combined. So that's probably supporting the strongish rupee view. We have turned overweight on INR earlier this month, and that trade seems to be working quite well.
Samiran, as you pointed out, yes, even as other Asian currencies have been falling, the Indian rupee has declined much less. And of course, there are domestic factors to look into that. But how would you look at the international cues as well? Because if the stimulus continues to be cut in US, would that lead to tighter dollar supplies into the market? Do you think that in turn could impact the currency?
Well, there are two issues here. First is that the near-term decline that happened in rupee happened more because of geopolitical tensions leading to some kind of a risk-off environment. And what you are pointing towards is more, in my view, a slightly medium-term issue, which is about Fed tightening, etc. In our view, as long as the Fed tightening is somewhat counterbalanced by the ECB easing, which could happen later in the year, then probably the impact on emerging market currencies will be that much lesser. But our biggest concern right now is that whether there will be another flare-up in geopolitical tensions driving the entire EM basket again lower. Our view is that RBI will probably not fight the geopolitical tension-related depreciation so much. It will keep its ammunition dry for fighting a much larger effect that the Fed tightening can have later.
Samiran, how would you rate the government's initiatives till time? I mean, have you seen some strength coming in from reforms? We, of course, have seen lots of money flowing into Indian equity and debt market. What would you give that to? Is it still the sentiment working here?
Yes, but sentiment always improves because of a reason. And the reason in this particular case is that India's macro fundamentals are improving and India's political stability is quite unique in the context of rest of the emerging market. So both this macro stability and political stability, this combination is making investors more comfortable about India. I don't think anybody is really expecting growth to pick up with a hurry. People do appreciate that most of the reforms will take time to implement, but if the overall trend remains on the positive side, then still more inflows can come and that could support the rupee even further. The bigger question is that how much comfort the RBI has on rupee appreciation and to what extent it will try to build up its reserves when capital inflows are coming in. That's why we don't think that it will be easy for the currency to breach the 60 mark on the downside. We'll probably see a more range-bound move between 60 to 62, where probably the fair value of rupee lies today.
Fair point. You know, Samiran, we've had good data in the recent past. I mean, the government statements also have been coming in. When comes September, October, that's the time when cyclical inflation is on the higher side. How would you look at the numbers then, and are you happy the way CAD numbers seem to be turning around?
Well, I'm more or less happy with the CAD situation. Let me start with that. At least for FY15, we do not see this number really reaching any kind of alarming level. Yes, we do worry that global growth appears to be slowing down a bit. Our European economists have just revised their GDP growth number down from 1.3% to 0.9%. In US also, we are not even going to see a 2% GDP growth for 2014. So the kind of export growth that we have seen, maybe it will be difficult to continue that kind of numbers for the rest of the fiscal year, but still it will not be alarming. In terms of inflation, I think the base effect drags it down from here till about October, November, but when it starts moving up again, the markets are kind of pricing in that kind of a path for inflation and will not really be too alarmed by it. But if inflation does not fall in the early part of 2015 to more manageable levels where the 6% 2016 Jan target will be met, then there could be renewed focus on this number.
Fair point. Vijay, getting you in the conversation also, what's your sense now coming in for the rupee? After 2 weeks of gains, we've started this week, the first day that is slightly lower, and it's a truncated week, so are you looking at choppy moves?
Yes, I am, Manisha. Secondly, you're also staring at the expiry of the August future series tomorrow noon, and therefore you're likely to see a little bit more of a choppiness, especially in the first half of the trading session. 60.40 in the prompt month futures, which I talked about as a support, which was hit on last trading session, is likely to hold. Add to that the cost of carry, which is getting built into the September future series, which is approximately 43 paise to the dollar. I think the September futures have a fair chance of hitting 61.20 tomorrow or latest by day after tomorrow. So I think there is a slight possibility of a pullback in the USD INR. Later on, of course, the rupee might just appreciate a little more, but in the absolute near term, I think the dollar bulls are likely to reign over the rupee bulls.